All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. The other day we talked about this market and we talked about the whys of this correction. And there's a lot of reasons thrown out there, this, that, the other. And I made the argument this is Fed. This is total Fed. This is the Fed looking at things differently than the market. It is CEOs looking at the Fed going, you're going to keep raising rates. Okay, we're going to lower our guidance going forward so we're not caught in a trap. It's analysts looking at the Fed saying, wow, you guys are going to keep raising rates. Okay, fine, we're going to have to lower our estimates then. And the Fed has continued to beat the same drum, and just continued to be the same. This morning, I added into the notes, and let's see here. It looks like the feed is not going out. All right. It looks like the feed's going out to some, but not all. So I'm just going to restart it here, and we'll be right back. All right. Hopefully that works a little bit better here. I'll pause here for just a moment, make sure everybody's able to access this. I'm given the green light by Jason saying it should be going out to everybody, so hopefully that's the case. Okay. All right. Earlier, or a few days ago, we talked about the whys of this whole market correction, what created this and what caused this. And there's a lot of reasons out there, a lot of stuff about China and, trade war and Brexit and, Italy and, you name it. There's always an issue, right? It's the markets. It's geopolitics. There's always something to point to. But I made the argument that this is completely on the Fed in terms of the whys behind this correction. It is the Fed basically losing touch with the market, or the market for the first time in a long time disagreeing with the Fed and seeing this growing divide between what the market believes and what the Fed believes. Same data, different beliefs. And we've seen CEOs, corporate CEOs during this earnings season, lower their earnings guidance, lower their revenue guidance going forward, worried about a rate cut. Now, they talk about, worried about China and the trade war, and that is a factor. But it's one of those where the rate cut's going to have a more material, or the rate hike is going to have a more material impact on a lot of the businesses. And we've heard the Fed, even here in October, the Fed's still pounding the table that, hey, you know what? Well, everything's great, grand, and wonderful. We're going to continue to raise rates. We're going to get back to normal. And we've heard them continue to pound that message. And the market has said, forget you. You're wrong, Fed. You're wrong. And we have seen analysts now coming out lowering their guidance on stocks and on companies based on future outlook with rate hike expectations. Now, this morning, I put into the message feed a link from Bloomberg from Fed Chair Powell's comments yesterday. And Fed Chair Powell's comments yesterday were completely different than what they have been. There was a serious tone change. If you're bullish, you look and go, wait a minute, is the Fed getting dovish? Well, what does dovish mean? Hawkish means the Fed is aiming to raise rates or tighten monetary policy. Dovish means that the Fed is looking to lower rates or ease monetary policy, right? And rarely do you say, oh, well, there's a hawk and a dove. It's, are they getting more hawkish or are they getting more dovish, right? And so the Fed is pretty hawkish right now, But their tone change doesn't make them doves, but it makes them more dovish or less hawkish. And we have seen this tone change, or we saw this tone change here yesterday, and and then here just a little bit ago, we saw a speech released from Powell, and we saw the market react, here to the upside on that. Now, when you look at the Fed, looking at the S&P isn't necessarily the way to kind of understand what the Fed is saying or which way they're going. But if you look at bonds, generally the bond market gets it right? And here you can see the reversal in the TLT yesterday, where it opened lower and rose throughout the day. What does this mean? This means interest rates are going down. Okay? When the TLT goes down, interest rates go up. When the TLT goes up, interest rates go down. So if the Fed is getting more dovish, interest rates, should fall, meaning TLT should rise. And we saw the TLT up a little bit this morning. It's held those gains here on this on some of these Powell comments, but we see the Fed changing here. We see this tone change for the first time in a long time. We see this tone change. And yes, I know China matters, trade war matters. I know there's this, that, and the other out there. There's all these other issues out there. We can talk about them until we're blue in the face. But when we look at what really drives stocks in the long term, it's economics and earnings. And the big worry about economics and earnings right now is the Fed's insistence on continuing to raise rates. If the Fed pauses, if the Fed says, you know what, we're going to take a break from raising rates, which they haven't said yet. But if we start to see that tone continue to change and then backtrack and say, you know what, things are good right now. We don't really need to adjust. Inflation's fine, which is what we're seeing. We didn't see any hot inflation number, right? I know the inflation number was, a 7-month high, but it was all due to energy, which has crashed here in the last few weeks. So next month it's going to be pretty low. Now you have a change in mentality, a change of mindset here from the Fed. How does the market react to that? Well, we'll see bonds go up. We'll see bonds go up and rates go down. What type of impact is that going to have? Right? How is that going to affect the overall markets? Well, it's going to create a little bit more of an investor-friendly environment. A much more investor-friendly environment. It'll also create an environment where being in bonds isn't as attractive. And so you'll see some rotation back into some stocks. I've also mentioned that I'm, on this pullback, one of the things that I would like to see, the way some of these end, it's not with gaps up, right? It's not with gaps up and okay, it's over. It generally ends with a gap down. Now, we got a gap down this morning. We got a nice gap down this morning. And you know what? On this gap down this morning, we saw banks actually in the green. We saw tech not getting wrecked. Now, this gap down was consumer related. And that's really why the market's red here today. If it weren't for the consumer sector, we'd see the market strongly in the green today. But we saw this gap down and chase lower. In fact, let me pull it up on S&P futures. Okay. We get the gap down. Right, a little early rally. We've seen those sold into, and then we get this kind of let's start to roll over. That reverses, and then here we go with the Fed comments being released, right? And we see about a 7-point jump in the market in that 1 minute. So we have a tone change from the Fed. We have a gap down, right? A gap down after a 120-point drop in the S&P. So we're now in an oversold position. Boy, I mean, I know it's taken a little bit longer than this right back here, but we've talked about how normal it is to have these pullbacks in these, after these kind of corrections. And now we've had this pullback. This is a very interesting candle shaping up today. And a very interesting trade setup shaping up today. And one that if we were to see the market close here even a little bit higher, the chances of further bounce in the short run are very strong. Are very strong here, and there is a catalyst. I know a lot of people say, well, there's no catalyst. There is an absolute catalyst here, for the big money that's really watching the real catalyst, not the TV catalyst, not the let's turn on this channel or that channel and let's talk about the details of Brexit or the details of what Warren Buffett's doing or the details about all these other small things. We have a Fed tone change that is happening right now. It's just starting. And that is something that will give confidence to the markets. And, you start talking about Fed changing their tone and changing their tone continually here into year end. You'll start seeing analysts upping their guidance going into next earnings season. And, it does set up a favorable ground. Now, you combine that with some sort of trade war resolution. Right, and we already saw this week. We saw that President Trump halted or delayed the auto tariffs. Right, now that didn't. You'll notice that didn't create a market rally. Right, President Trump pausing the tariffs, that didn't create a market rally. That's not the whole gist of what's going on out there. The Fed is the biggest worry, and that is the point. That is where we see a little bit of change going on and what could be a really big change going forward. A resolution to the trade war will hit the headlines, and it will create a jump, but it won't. It's not going to happen at the absolute bottom. That type of news will probably come in after a little bit of a rally here. So anyway, we see that happening here today, and this is a very bullish change here overall, and it's one that you start looking at some of these stocks that really set some nice signals. Really kind of made some nice trade signals. Even a Caterpillar that came off strong off the bottom now has had a nice little pullback. You see its outperformance here today. Bank of America, which I've traded here this morning, has had that pullback into the retracement area. Gap down today, firming up here. There's some real positive action, going on out there. Now, keep in mind, option prices are still pretty elevated. They're going to start to come on down, but we still are talking about a little bit of an elevated VIX, and a VIX that, if the market does make its next bounce, a VIX that's probably going to 14. And what's that going to do to option values across the board, right? We talked a little bit about kind of the short way to price options yesterday, and we looked at the SPY, and I basically said, yeah, this is how you can gauge it, this is how you do it, but I'm not interested with it looking like this, right? It just doesn't make a lot of sense from a risk-reward standpoint, with a lot of the monthly options that are out there. That will change. That will change very quickly. If this is a bottom, we get a little gap up tomorrow and a little bit of appreciation tomorrow, we will see option prices really get hammered. And historically, option prices go down during next week, during the Thanksgiving holiday week here in the U.S. Some of that due to time decay, a lot of that just due to volatility compression that tends to happen on that week. But, going into that week here, this year, I think is very different than in many years past. Looking at the way some of the things are kind of shaping up and setting up, and looking at the challenge kicking off tomorrow morning, I just look and I go, okay, Micron, hold on right here. Just sit, just stay. Stay, halt, right? And gap up 30 cents tomorrow morning, and let's go. But there are going to be quite a few things that could possibly shape up in that fashion here tomorrow, from some of the banks to some of the industrials to even some of these tech names, which are really holding up. And you'll notice when the market was down here today, Apple was green. In fact, Apple's been green all day. And we've talked about until Apple outperforms the market's not going to find a bottom. We see Apple outperforming the market today. And, to be able to look and say market has found a short-term bottom here, then, that's a very logical argument and a very, very good argument, in my opinion. I think if you're looking to play this whole Fed shift, right, the S&P, yeah, you can play it that way. It'll be choppy. But TLT to the upside will be very interesting. I'm not buying TLT to the upside right here. Not right here. But on its next pullback, I want in. And that's what I will be looking for. I'll be looking for its next pullback. And if it does have its next pullback, I will be wanting to get some involvement here in the TLT. A shift in the Fed would also be a drop in the U.S. dollar. Now, we haven't seen that here so far. There's still, Brexit stuff right now that's keeping the dollar up and keeping it elevated as the pound pretty much, the FXB, you can kind of see it, the pound and what it's done here as it's back down to its lows. But that could be an interesting way to play it as the market sentiments, start to shift. We saw oil inventory data here today, and a huge build in crude, and oil's up, right? And oil is up. Tells you what? The market's not paying so much attention to the supply data. It's paying attention to OPEC and what they might do. There's some very interesting conspiracy theories being thrown out there around the oil market right now, and some that I actually kind of go, you know what? There's some logic. There's some sense there. And most conspiracy theories, it's like, okay, come on. That's pretty much ridiculous. But with this one, with some of them with the oil market, especially about, U.S. President Trump and Iranian sanctions and Saudi output, those are kind of interesting. And, you can see how those would actually materialize and how they would happen. And if that is the case, if it is the case that it was some is what others are terming it collusion that took place there, the bounce that we see in the oil market on some sort of OPEC cut could be massive. We talked about that. If OPEC cuts, there's going to be a bounce that probably you can sell into. But this may be a bounce that exceeds anything that I would have expected earlier, and so we'll be interested to keep an eye on here with that in how the market kind of shapes up here, with that. But overall, this is something where I think we're seeing a material change here today. And it is something where it is driven by the Fed, it is driven by a change of tone in the Fed, and it is driven by, to me, what is the biggest key out there in the market. Now, during this time over the last week, as the markets have been selling off, we have seen the FXI outperform. And in fact, the FXI, when the market hit its lows today, the FXI was still green. The FXI, emerging markets, even with the U.S. dollar on the rise, has been outperforming. We have seen S&P futures every night rally during the Asian sessions and fall during the European sessions. We see money rotating into the emerging markets and into China. Does that mean somebody knows something? Does that mean there's great valuation here? Does that mean they're immune to any type of pullback, right? You can always ask all those different questions, but the reality is we see this rotation happening. It is something where we've started to see some improvement in some of the technicals within the space. And let's face it, if the Fed is not so hawkish, right? If the Fed gets a little more dovish, that makes global equities far more attractive. And, we have seen you just take a look at the FXI in the last 4 days, right? And I'm just going to pull up a 1 hour chart and show this, but pretty much, here's the FXI. Let's clean this up. Let's get rid of our indicators. We don't need them. Let's just come to a 1 hour here. And let's put on the price here of the S&P 500. Same scale. Let's get the let's get it a little different here. We'll come off of that. That's not going to help us. Come down here to indicator and put on price. We'll put in the SPX. All right. So here we go. Here is the S&P rallying, right? Here's the S&P rallying and the FXI rallying. The S&P dropping, the FXI dropping. Okay? Right? They've kind of been moving together. S&P rallying, FXI rallying. S&P dropping, FXI dropping. Right? They've been moving pretty much together. And hey, here we go. FXI dropped. S&P dropped. But over the last 4 days, what has happened? The S&P has been dropping, and the FXI has been rising. Something we just haven't seen. And, there's a million ways we can speculate about it. There's a million different things we can say about it. But the reality is, from a price action standpoint, there is a change happening. There is an absolute change going on. We saw YY earnings yesterday. And, big, nice bounce in earnings. Big move up here again here today. So we see money willing to go into these stocks, into these Chinese names. We look at Alibaba. It's sitting at a 1 month high, right? I mean, it's been a while since we could say Alibaba's sitting at a 1 month high. We're just seeing a material change, come in here. And, you look at something like a JD. That has had this, we talked about divergences the other day, right? Yeah, and you look at the MACD. What's the MACD been doing? MACD has been rising now for 2 months as JD has been falling. That is absolute positive divergence. The last time we saw it was here in May and June. MACD on the rise, stock on the decline, slightly flat to down. What did the stock do afterwards? Made a very nice run. We see a lot of this within Chinese equities and a lot of these Chinese names. And, is something that, definitely to be taken into account and to be noted. And, we'll provide some trade opportunities here, hopefully starting, early tomorrow morning. But we'll see where things open up at, see where things are positioned, here overall. But this is a big change. This is a big change. This is not a little change. This is not a token change. This is not a, let's, talk it away because of this, that, and the other. This is a real change. This is a real change, and very interesting to see how the money is flowing into the market here today. Where it is going into, some of those areas that have been most affected by the Fed, right? Let's face it, the consumer hasn't been all that affected by the Fed. We're not seeing money really flow into it. Is some of that due to Walmart? Some of that due to KB Home? Yeah, probably. In fact, a big piece of that. But, we see money flowing into more economically sensitive names, and that is something I would be surprised if we saw a reverse here today to a great degree. And we've talked about CSX. And it gapped up yesterday, gave a nice little buy signal yesterday. Reversed, gapped down this morning with the market, but holding in here very, very well as it's pushing on higher. I've had my eye on these truckers, Old Dominion, JB Hunt. I'm not in them yet. But we'll see. We'll see how they kind of start to shape up here. But this logic of oil down, gas down, that should help the truckers. Still hasn't kicked in, but we are seeing some of the rails really hold up, really outperform here as well. We see oil upticking in the airlines, taking a little bit of a backseat here today. So we are seeing that definite kind of oil correlation with those names. All right, but anyway, just want to get on, share my thoughts here on what we're seeing in the market today. This kind of gap down and rally element, and with a what I consider to be an absolute massive catalyst. It's not going to be a 100-point catalyst. If there's positive trade war news, that's probably going to be a bigger market mover. But in terms of a reliability type of a catalyst, I don't see. This is one that is something that I think creates change over the course of the next several months. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.